Welcome back to Primary Source China Investment. This week we're on show P5, and we're going to be talking a little bit about China's sovereign wealth funds and their activities recently. And we've covered this space before. As you can see, the sovereign wealth funds, broadly defined, are immense. You know, the PBOC has $3.3 trillion equivalent. CIC has about 1.3 trillion equivalent. The SAFE, which is the foreign exchange control, is about $1 trillion. NSSF, which is the Social Security Fund, and the CADF, a lot of people may not know about that. That's the African Development Fund, which is much smaller at about 10 billion. But the old trope of follow the money is always a good place to start and to keep looking. Of course, the investment profile of these various funds are very different. The PBOC is clearly not holding equities. The NSSF probably not as well. But this week, we learned that Central Huijin, which is part of CIC, increased their stake in financials. So what does that mean? It's really a little bit performative. I mean, peng.guo, it was a small amount of money. So what's your take on that move on the outset?
So they really like the true bigger player in the market. So even they have like the small movement that really show the signals of the national policy. So I think entire the investors track such kind of the signal. It's really not what kind of money they put into the market. And so most of the time, like the stability fund, they just put like the small amount, like a few days ago. They just show the country's policy and direction. So I think they just hope the other investors could use such the signals and create some big effect in the market.
Right. The last time this happened was in 2015. At the time, the market was in the middle of what would be a 40% decline in the major index. This time, like you say, the move is a lot smaller, maybe about 65 million US dollar equivalent. But the move did move names. You can see here with Bank of China and ICBC, these are 5-day moves, up 6%, up 5% respectively, when the CSI 300 was flat. The other thing that was announced is that Beijing is also considering a bespoke fund to, well, there's no polite way to say it, but to buy stocks opportunistically. So this is more about the directionality. And I think the signaling, what you mentioned, Peng, was also correct. Beijing is signaling that they are supporting the largest institutions in China. And, I can hear what people are saying as well. They're going to say, oh, Gerard, peng.guo, this is not just about China. Beijing is enacting programs to expand the private business as well. There were some headlines over the summer and just recently that Beijing is supporting the private businesses as well. And yeah, that's true, but there's a structural problem, and I want to get into that a little bit. The entire financial system incentivizes large state-run banks to lend to large state-run institutions. Private firms survive in spite of this, not as a result of this. So lending rates vary widely, and it's not necessarily based on credit risk. It's based on sometimes government support, either explicitly or implicitly. This is a trend for greater party control/ownership, and it's not new. peng.guo, what's your thoughts about that? Is there anything to look into about party control and party ownership versus private ownership and private control?
I think right now people pretty much understand ownership is really doesn't matters. So it really depends who can organize the people to create the value. The ownership is more like the final step, how to split the cake. And I think ownership is more like the people try to keep their rights into cut the cake in the final step. Right now, most of the time, they won't interrupt the operations of the business. So people understand that like the private business is really the major source to create the job opportunity and to support the contribute the tax and make much more contribution compared to other state-owned companies. I think the country understands the problem, and also you mentioned the lending rate is not really based on credit. That's a trigger very unfair for funding or support the private business because they always get the higher rate. That also trigger many like the shadow bank in the market.
Right, exactly. Yeah.
It's just with the national resource, I think put the extra burden for the resource allocation.
Yeah, somebody will always step in. I do want to talk a little bit about the ownership because it is a double-edged sword because while party control slash ownership can make you, it can also break you. I think there's a number of instances. If you look at Evergrande, which was not explicitly considered an SOE, but Xu Jiayin is a party member, and when Evergrande is currently being broken up, it is going to state-owned enterprises. It's going to state-run construction companies. They set up a new insurance company, bespoke to look after the assets of that. And also remember, Pony Ma of Tencent, Jack Ma of Alibaba, Wang Chuanfu of BYD, all of them are party members. So the party can make you, they can also break you. And that's what you talk about, value creation and value demolition, because some of these entities have huge value and there is this implicit partnership that companies have to go along with. And it can be great. It can also be a nightmare. I mean,
that's absolutely right.
Yeah.
So it's a really double-edged sword.
Yeah.
But basically, people discuss those kind of things before. Like the many successful people, they think that really purely based on their ability. But another opinion think because China make this country and make all the infrastructure, and also they have right to collect the tax to maintain and support this country. So if you live in this country, obviously that doesn't matter you join or not join the community party. So you have to under the rule of them.
Yeah, that's exactly correct. And everybody understands these rules. And if you don't understand these rules, you better get familiar with them soon, because it's not just the Chinese companies, it's the foreign companies too. Foreign companies now have,
that's exactly right.
Party groups or subsidiaries or management committee teams that are embedded in the foreign companies as well. And this is not new. This started in 2017. So this is not new information. So all of the people that are clamoring for space, the consultants and the product issuers and all those other things, none of this is new information. It's how do you navigate that? So this week, we started with the sovereign wealth fund and we did get to ownership, but it is all connected. And this is all about doing business on the ground in China. And you have to make decisions about how you're going to manage that business and also how you're going to invest your money towards Chinese mainland assets. And with that, we're going to leave it for this week, and we'll see you next week. Thanks.
Thank you.